Good afternoon, everyone, and welcome to this Parkwell webinar on the Holy Grail of Scalability. A couple of bits of admin just before we start. First of all, the slides from this afternoon and indeed a video of this session will be available on the Compare website over the next few days. Second of all, as we go through the session, if you have any questions or indeed any questions you want me to put to the panel, please use the question and answer functionality within Zoom. Okay, before we get started with the actual detail, I'd like to quickly introduce Parkwell. Please can I have the next slide? So for those of you who don't know us, we're a mid-tier independent firm of management consultants. We're based in the City of London. We specialize in financial services, amongst other things, but we have a particular specialization within the wealth management sector. And indeed, many of you will know our sister company, Compare, who provide benchmarking data and services to the wealth sector. And because of that relationship, we have a very nice insight into the operational performance of many of the wealth management firms. We have a team of consultants, all with considerable experience across a number of business sectors, and we've helped clients to deliver projects including the development and delivery of business strategy, the regulatory compliance, and business performance measurement, and particularly relevant to the subject tonight, the business process optimization. So the identification of areas within your business processes that are suboptimal and the redesign of the processes to improve the performance of that process. And that often involves the implementation of technology solutions. Can I have the next slide, please? So just to give you a flavor for the clients that we have, I think you can see we have a wide range across the wealth sector, ranging from some of the very large firms to some of the more niche firms. Can I have the next slide, please? So the agenda for this afternoon is, obviously, I'm doing the intro. We're then having my colleague Ian, who's going to talk about the process of actually identifying how we achieve scalability. We then have Tariq Khan from Objectway, who's going to talk about how we can use technology to address the scalability issue. We then have our panel discussion, which will last for about half an hour, and I'll introduce the panelists as and when we get there, and then I'll wrap up around about 5 o'clock. So before we get started with Ian, I'm just going to set the scene regarding scalability and what we mean by this term. So it can mean a range of things to different people, from the ability to accept additional business easily, right through to what we term the Holy Grail, which is to do with the fact that most wealth firms, there's a fairly close relationship between the number of clients we have and therefore our revenue, and the number of staff we need to service those clients, and therefore the operational costs. And what we're really talking about in achieving scalability is attempting to break that link so we can grow our revenue at a much faster rate than we grow our cost base. So I think that's a sensible place to hand over to Ian. So over to you, Ian.
Thanks very much, Jason. Thank you for that introduction. Just to introduce myself, some of you on the call may know me already. I've been working with Parkwell for over 20 years, specializing within the wealth management sector in that time, delivering a wide range of projects, always with a view to efficiency and scalability wherever possible. Thanks. Next slide, please. So as Jason has just mentioned, and I'm going to recap this point because it is important, we define scalability as the breaking that link between revenue and costs so that you can increase revenue without a directly related increase in your cost base. And that's really important to be able to achieve strategic success over a number of years. Next slide, please. It's not easy to achieve. These figures that are provided by Compare show that in 2020, only 53% of firms defined as scalable under the Compere definition. And what we're saying there is they're a profitable firm, and over the period in question, they've increased their revenue and increased their pre-tax profit margin. So they're growing their revenue and growing their margins, showing that their cost base isn't growing at the same rate. So as you can see, only half of firms can achieve that at the moment. And if you look back over the previous 5 years, very few firms have achieved that on a regular year-on-year basis. Next slide, please. So where do we find processes that aren't scalable? And it's really straightforward, I think. Anywhere in your processes where you require manual intervention, where you cannot do things automatically by use of an IT system. So anywhere you've got things like data entry, any use of paper forms that are shunted around the business, where you have to speak to individuals outside of the firm using, telephone, email, whatever it may be. And why do those processes exist? In our view, it's nearly always because of a lack of standardization or a lack of efficient data capture and usage. And what do we mean by standardization? Anything that's really looking to provide bespoke services to clients or even to counterparties. Next slide, please. So let's look at some examples of those bespoke processes. A classic one that we find in firms over and over again is fees processing. And what happens is the front office, who are rightly keen to win business, will negotiate with clients. They'll provide the offer to a client of a non-standard fee arrangement. Client's happy to take that up. Why wouldn't they? They get a better deal. And the front office are happy because they have achieved a win. They've got a new piece of business through the door. But when you look at the processing requirements downstream for your fees team, for your operations team, you could easily identify where those additional costs and additional processes outweigh any perhaps additional revenue that you've gained from that client. So really, standardization of fees is a classic opportunity to improve scalability. Rekeying data to multiple systems, another classic issue that firms have. Once the data is in one system, it should be interfaced automatically to any other systems you use. But we find data being rekeyed over and over again to investment systems, planning systems, CRM systems without that automation that's there. There's some other examples there. I'm not going to go through the whole list, but hopefully those probably ring some bells with people on this call. Next slide, please. So identifying the problems are one thing. How do you resolve them? Or how do you identify the specific areas in your firm first that you then seek to resolve? And really, I think what we're saying here, it's a reasonably straightforward process. Pick one of your areas, one of your processes. Just has to be one process to start with, and walk through it step by step with the individuals who deliver that process. What are they required to do that isn't standardized? Where are they required to do a one-off approach? Where are they required to duplicate activities? Where are they required to produce manual reports, spreadsheet-based processes? Where does the information get handed off to? And as you walk through in that level of detail, I guarantee you will find areas in anything from a reasonably complex process upwards where you have these non-scalable areas, where you have that manual intervention, where you have bespoke arrangements. Next slide, please. So what resolutions are out there? Classic one, or a really useful one, and I think one that's become, has really been grown, perhaps because of COVID and because of home working, self-service for clients. And what does that mean? It can mean for onboarding that clients are required to enter their own contact data, their own investment preferences directly into your systems. So you're not even keying them once into the system. The client or the prospective client is doing that keying. Obviously, that saves time for your operations team and saves overheads. It's also beneficial for the client. They have control over that data. They can be confident that it's accurate and entered in a timely manner. Client reporting, another classic area where people or clients or even client-facing staff protect the reports they provide. Paper reports, clients have to see paper reports. You'll hear people say, you'll hear relationship managers say, that's not the case. And again, COVID has changed this. Clients will be more than happy to look at electronic reports in this day and age. Next slide, please. Standardization. Wherever you've got a bespoke process that requires manual intervention and manual and non-scalable activities. We've talked about fee codes. I think investment portfolios is a classic area. Too often we see firms where similar clients are being managed by parallel investment teams, parallel processes. They have portfolios that are the same but different. Centralize those portfolios, centralize investment decisions, have a really tightly controlled approved holdings list. All of these controls will help to build scalability. Bespoke reporting, don't make that available to clients. Client gets a standard report once a quarter. If it's essential, that bespoke reporting is available, deliver that on an electronic only basis. Don't print off reports and send them out. Next slide, please. There is increasing opportunities for automation on a systematic basis. And I'm not talking about replacing your core systems here. I'm talking about additional systems that are available to improve what happens at the moment. Robotic process automation, RPA, where you have bots running to scrape screens, to cut and paste data, to move information around without human intervention. I've seen really successfully this implemented on a sort of hit squad basis. A team who have expertise in RPA will pick one process, implement RPA improvements to that process, demonstrate the benefits, and then move on to the next one. There are increasingly off-the-shelf systems that are available. I've seen in clients very recently corporate actions being automated, so that messaging is sent on a completely automated basis to front office staff. And we talked about the opportunities for digital reporting that are now there for off-the-shelf systems. Next, please. So I'm gonna wrap up over the next few slides, but my message here is really, you're not going to solve every problem on day one, or even week one or month one. It's an ongoing mindset to improve scalability and efficiency in your businesses. The first step is the most important. Once you've started that process of continual improvement, it becomes more of a self-fulfilling prophecy that increases the benefits to your business. Next, please. Resourcing is a tricky one. In particular, I think for process change and process analysis, it can be challenging to use your internal staff or staff who deliver those processes on a day-to-day basis. If you've got somebody who's external, either external to the business or external to the team in question, they can cast an unbiased eye on how things are done. They can spot things that people who do this who are in the detail of this on a day-to-day basis won't recognize. Thank you. Next, please. So to conclude, Parkwell have expertise in this area. We've helped firms with scalable procedures over many years, and we can assist, whether that's looking at an impact assessment or an analysis of where your challenges are, through to project and program management, either running the project completely or assisting your internal project teams with mentoring or oversight capabilities, we're very happy to talk to you and to explore what opportunities are out there to assist you with scalability. Okay, thank you very much. I'm going to hand over now to Tariq Khan from Objectway, who's going to talk about some of the digital opportunities with scalability. Thanks, Tariq.
Thanks a lot, Ian. Good afternoon, everyone. It's really great to be here, especially excited to talk about such an important topic, or challenge, you might say, to the industry. A challenge that's yielded very mixed results over the years, as one of Ian's slides showed. And it's resulted in lots of room for improvement for virtually all firms. So the objective of my presentation is to discuss how digital change can enable firms to meet this challenge of scalability. Next slide, please. So this is what I'll be speaking about over the next 10 or so minutes. So I'll tell you a bit about Objectway, so who we are, what we do. Then we'll discuss what the current status of scalability is like in the industry. We'll touch on some of the main reasons for why this is, and I'll be focusing on operational deficiency. And then we'll look at what firms can and are achieving in terms of achieving scale through digital change. And I'll be referring to some recent research with wealth management firms and conducted by Objectway, some benchmarking statistics from Compare, and I'll also be referring to a real-life case study of one of Objectway's clients, which I think and hope you'll find interesting. So next slide, please. Okay, a bit about Objectway. So Objectway is a global fintech firm. We've got over 30 years of local experience in working with UK wealth managers and private banks. We provide firms with front to back office software solutions, but we aim to be more than just a provider of great solutions. We aim to be a long-term partner in change. A couple of things to highlight from this slide. You'll see some of our clients there. You'll notice that they vary considerably in size and in business model. We don't believe in a one-size-fits-all. Believe in the need to be flexible. And I'm having more and more conversations with board members on how to grow with scale, and we'll talk about that a bit more. Next slide, please. So I want to give you a flavour of what the solution actually looks like. So as you can see here, it's modular. It spans the front to the back office, and each module can integrate with third-party systems via open APIs. And it's really designed to achieve four things. One is to enhance the client experience through modules, for example, such as the client portal and onboarding, client lifecycle management, things that Ian mentioned as well. Two is to improve advisor productivity. So, for example, the portfolio management solution with an embedded risk engine. So portfolio managers can get real-time alerts and rebalance, reduces their admin time and increases their efficiency and leads to greater scale. Three is to give firms an edge in terms of innovation. So, for example, we have a portfolio optimizer that uses AI, which is linked to client preferences, and then it suggests products or portfolios that client might be interested in. And then last, and certainly not least, it's there to enable process automation, straight through processing from front and back office. And I'll try and bring this to colour a bit more in the case study as well, and how it's critical for scale. Okay, next slide, please. Okay, so let's have a look at the current state of scalability. And the first slide I'm going to show you is from some very recent research that we conducted with C-level, so board-level wealth managers. So we asked them, how important are digital services in achieving your business objectives? One being least important, five being the most important. And you'll see from the top that digital change is seen as either very important or critical in achieving the business objectives of growth and scale. So acquiring new customers or developing existing customers' growth and providing existing services in a more cost-efficient, scalable way. Okay, so there's probably no surprise to anyone. Firms want to grow, they want to scale, and they see digital as playing a very important role. Have a look at the bottom of the slide. So we asked how well are your firm's current technology placed to meet the following criteria, with 1 being strongly disagree and 5 being strongly agree. So is it efficient? So most firms say, no, currently it's not efficient. Is it scalable to support business growth? You're on the fence. So I guess the main point here is that firms realize that digital is going to play a very important part, but currently things have to change. And just something to bear in mind, 7 out of 10 firms are currently reviewing and looking to change their system. So firms certainly know that there needs to be change, and I expect there to be quite a bit of change over the coming months and years after things are implemented. Next slide, please. Okay, so Ian showed us something over 5 years, how many firms are scalable. And you'll have noticed that most of the time it was as much as 6 or 7 firms out of 10 were not actually scalable. I think last year was an anomaly where more than 5 out of 10 firms were scalable. And that's actually perceived as a good result. So why is this? If you look here, you can see the circles here, the chart here, is showing comparison of 2016 to 2020. Okay, and this is from Compe's research. So you can see that 8 out of 10 firms are profitable, 2016 to 2020. 8 out of 10 firms have actually grown their revenue, but the majority of firms have actually decreased margin during this time. So revenues are up, they're profitable, but margin is down. Now, why is this? I think we already alluded to this. It's cost. Costs are going up. Can we have the next slide, please? It makes it a bit clearer. Thank you. Thank you. So here you can see a clear picture. Look at revenue. Revenue's increased by about 20%, but costs have gone up by 24% at the same time. So costs have outstripped revenue by about 20% during that time. And let's look at some of the reasons why. Next slide, please. Okay, so there's a number of reasons, but I'm going to focus on one of the main reasons, which is inefficient IT and operation. And just have a look at the spread of IT costs and operation costs as a percentage of revenue. And these are quartile figures. So look at the lower quartile to upper quartile. So these are averages. So the actual spread is much wider than this. And I think this is where the main issue is. And we'll go into why this is as well. But just to give you a sense of what the spread looks like, on the next slide, you'll see the IT cost as a percentage of revenue actually spread. Can we see the slide, please? Okay. So if you look at this, you just see a massive spread in terms of just IT costs. And what does this tell you? Well, first of all, it tells you as an industry we're inefficient with such a wide spread of costs. The median here is around about just under 11%, but 40% of the firms are above the median, and some of them are double or even triple the median value. So, they're spending over 30%, 33% on IT costs as a percentage of their total revenue. So why is this? So we've touched on it a bit already. Most firms are burdened with legacy systems. And these legacy systems have had a profound impact on operation, as you would expect. These systems were created at a time when they weren't actually designed to communicate with each other. Technological architecture is different now. You have modular, you have open API, like, for example, our Wealth suite, and many others have the same thing. So what you have here is, for example, Ian mentioned data flow. So there's lots of patching between systems. Data is never the same in one system to another. It goes through an Excel sheet, it's manually inputted, then it's manually uploaded and downloaded. There's so many errors, so much duplication, and so much waste of time. It's completely inefficient. Having said that, we're in an industry which is very resilient. As an average, the pre-tax profit margin is 23%. So on the bright side, there's a great opportunity here. There's a great opportunity to scale. And it's very easy to say and more difficult to do, but one of the ways to do that would be to simplify your legacy IT. This doesn't have to be done in a risky kind of big bang approach. You can do it in an incremental stage via modules, for example, that you need, or identify where in your business the greatest bottlenecks are and try and change them. And I'll show you in a minute what the case study looks like. And another thing to maybe point out here is I'm sure we're going to see even more PE activity in the sector, because private equity realizes that there's a great opportunity here for firms to improve their margin through digital change. And I think we'll see lots more activity. We've already seen some this year, but we'll see a lot more in the coming months as well. Next slide, please. Okay, so this is kind of the final slide, which really gives you a start message here. Basically, what it's showing is the IT cost as a percentage of total revenue versus profitability on the x-axis. And it's pretty simple to read. It's not a pretty picture, but the more you spend on IT, the less profitable you are. Again, I've already mentioned, it's not all doom and gloom. Firms know that this is an issue. Firms are looking to change. And there'll be some external parties as well, such as PE firms and other firms gobbling up firms looking for quick wins in terms of efficiency through digital change. So I expect it, hopefully when we come back here in about 2 to 3 years, we will see a correlation which looks different. Hopefully it looks the opposite of this. Because if it doesn't, and there's been the amount of IT change that we're seeing in the market, then obviously something's gone very, very wrong. Okay, next slide, please. Okay, so these are my final few slides. I'm going to end on what digital change can do for scalability. And I'll give you one of Objectway's clients who we've been partnering with for a while now. And it's a great story. So it's a UK wealth manager, kind of medium sized, and on a great growth trajectory. So they had a couple of business goals, which was growing the client base, improving efficiency and improving margin. So basically they wanted to grow at scale, which is what firms want to do now as well. And we partnered with them and we decided that we should do this in phases. So the first phase was changing the legacy back office to Objectway's wealth tech front and back office. So the back office with the front office integrated. Now from this, they were looking to improve advisor productivity and to get straight through processing and automation, and really give back time to their front office to actually do value-added tasks. Not just the front office, the back office as well, but to engage in value-added tasks. You know, you see in the industry, some of the front office say look, they spend 1/3 to 2/3 of their time on admin. You know, I think digital change can have a massive impact on that, and it did with this firm. I'll show you in a bit. So the second phase was implementing a CRM, and the first phase took 18 to 20 months. So this is not something that's done overnight, and it's not easy. It's definitely a challenge. You know, it's difficult. You probably have to partner with someone that you can see eye to eye with and get over the bumps with, because there certainly will be bumps along the way. But the results are there to see. The second stage was they implemented a CRM. This took about half the time. This took about 9 months. And what this did is it allowed them to manage their clients more effectively. So really monitor client preferences and suitability. Again, reduce the admin burden, but again, target clients in a personal way. And I think it was mentioned, you know, not to bespoke. For example, reporting was one. I'll challenge that, and maybe the panel can take that up if you have time. I don't have time to go into it now, but lots of firms now are looking at differentiating via hyper-personalization. So personalization at scale seems like a contradiction, but it's not, because digital can enable that quite a long way. And maybe the panel can talk about that a bit more. And now they've got a roadmap. Their third phase, they will be probably introducing some risk modules as well. So this will allow their portfolio managers to get real-time alerts, to rebalance in real time, to monitor client preferences against portfolios as well, for example, ESG portfolios as well. So again, it will actually be much more personalized, more efficient, and actually, I think more scalable as well. Next slide, please. So let's see what the results were like. Okay, you probably anticipated the results would be good, but you know, they've had some fantastic results. You know, their AUM has grown by more than double, and this is over 5 years. So this is the full implementation took the 2 phases, took about 24 months. So this is after 3 years, effectively after implementation, and their profits have increased handsomely. But I guess this is something important. The headcount hasn't increased. In fact, it's reduced. So remember those charts where we saw that most of the firms, their margin had actually reduced. Well, in this case, this would be one of the firms where the margin has increased. So they've grown with scale, with scalability. You know, the rudimentary definition that if you increase your revenue and you don't increase your cost as much, then you're scalable. And they certainly are. The other 2 great things they've got from this is client satisfaction rates have increased massively as well. This is from their own internal client satisfaction survey. You know, they've seen a real uptake in digital engagement, in clients being able to, again, I think we'll probably discuss this in the panel, because clients have been able to receive tailored reports, bespoke reports, you might call them. And you can do that by using personas. You know, it doesn't have to be different for every single client, but every single client thinks that it's tailored to them. And they also have a defined digital roadmap as well. So they already know what's down the line in the next 2-3 years as well. And they're thinking of innovative things to differentiate themselves from the market, because they're on a constant kind of journey of change, with growth and scale being their main aims. Okay, next slide, please. I think it's mine, the final slide. Okay, so some of the key takeaways. So we've seen that scalable growth is a main priority and a major challenge, has been for a long time. And most firms are finding it very difficult to meet that challenge. The industry is inefficient with respect to IT and operations. I truly think that's going to change. I mean, I am an optimist, but I think there's a lot of work being done in this area. And it won't be something that's done overnight, but I think it can be done. For example, you've seen in the case study. Firms need to simplify spaghetti legacy IT architecture. If they do that, then digital change will help to enable operational efficiency. This will drive greater revenue, and costs won't increase at the same time. Over time, hopefully they will even lower. I think the main point here is digital change can enable scalable growth. It's not easy, but it can be done. And for the sector as a whole, there's an amazing opportunity for firms to improve and scale. And that's it for me. Thank you. Final slide, which is thank you.
Thank you very much, Tarek. Can we have the next slide, please, Nick? So we're now going to move on to our panel session, and we've got 3 excellent panelists, and I'm going to ask them to introduce themselves. So Mark, would you like to tell us who you are and what you do, please?
Indeed. Thanks, Jason. Good afternoon, everybody. I'm Mark Harrison. Wish I still looked like my picture. I'm Chief Technology Officer at Killick & Co. General background in transformation, IT, operational management across a range of organizations, from the ridiculous BNP Paribas to the sublime Killick & Co.
Thank you, Mark. Glenn, do you want to tell us a little bit about yourself, please?
Thank you, Jason. Good afternoon, everybody. Glenn Murphy, Chief Operating Officer at Moultries. Moultries is an independent platform provider of custodian services, as well as investment administration and digital reporting. Very much, following Mark there around a little bit of personal history. Prior to Moultries, I was Chief Operating Officer at Stonehage Fleming, also in industry for over 20 years with roles at Schroders as well as Rathbones. Thank you.
Thank you, Glenn. Gillian.
My name is Gillian King. I'm the Global Head of the Cybersecurity Programme at HSBC. Prior to moving to HSBC, I worked for a small private bank. And before that, I was actually at Parkwell. So I spent quite a lot of time myself in the financial services industry, but also within wealth management itself. And I specialise in change. So a lot of the scalability that I've worked on in the past has involved taking things along those particular lines.
Thank you, Gillian.
And I wish I still looked like my picture too.
I'm sure we all do, yes, indeed. Okay, let's have the first question. So we've talked a lot about the application of technology. Do we think that that scalability is totally reliant on technology, or are there other things that we need to consider? So let's start with that question for Mark, please.
Absolutely not. And my comments would be, if an organization is looking for a sort of tenfold increase in capability, that's bound to mean some kind of IT replatforming. But if we're looking at some of the more incremental scalability, which has been the tone of this presentation so far, it's absolutely not necessary to be looking at what I call mainstream tech. And kind of picking up on some of the stuff that both Tariq and Ian have said, there's a couple of things going on. Having the right skills in the organization that enable looking at efficiency and implementing efficiency is actually one of the big deals for our sector. I believe we're a sector that's absolutely full of experts, but not necessarily people that understand the management of efficiency. And the other point, and Ian was strong on this, is what I would call ops development, i.e. not necessarily mainstream IT, but using techniques and frameworks like RPA and sort of expert systems, things like that, even effective use of good spreadsheets, shared spreadsheets alongside of your mainstream systems. There's an awful lot of scalability that can come out of that kind of work. Less risky, more incremental, often very good results.
Thank you, Mark. And the same question to Glenn, please.
Thank you, Jason. I guess, if we're looking for the dream world, we'd probably say yes, 100% technology, that's the answer. But we're all realistic. We've all spent many years in industry, and we recognize that actually systems are basically built around lots of processes, and in fact, they encapsulate those lots of processes in there. So you can't really say technology is going to answer 100%, because of course, you're still going to have people and processes that are going to exist outside of those systems. So most certainly, I would say scalability, if you want to get to 100%, technology isn't fully the answer, but of course, it gets you furthest there as possible. So it's all really going back to looking at those processes that are involved. And of course, that will be around people. So you want to maximize your efficiencies. You want to ensure processes are streamlined. But of course, over time, it would be unrealistic to also say that you can't eventually get 100% of your technology in shape to address that. Yes, that is possible, but your business is going to grow. Your business has to grow. So it's going to become a little bit more complicated. It's going to take on new opportunities, new business lines, and that's going to create more processes in there. And of course, eventually then the technology has to catch up. So the dream world would be 100% technology, but we all have to be realistic. And of course, it's getting there that will take time.
So Glenn, do you find you have a lot of non-standard processes like Ian talked about?
No, I would say actually from a STP perspective, very much we're at about the 89%. So in terms of standardization, it is there, but of course there will be outliers, and those outliers are what we would say is bespoke processes yet, where we've had to accommodate perhaps a pivot into a new opportunity, a new business line. So that's entirely natural, and of course. Every investment manager as well will do exactly the same as they, of course, pivot as they grow as well.
Thank you, Glenn. So Gillian, do you think scalability is reliant on technology?
I don't think it is 100% reliant on technology. I think we're a little bit away from Glenn's dream world in that respect. But I do think the easiest way to look at it is to look at what drives your business, how does it work, your operations. It's generally accepted that it's people, processes, and systems. Mark mentioned about getting the right skills, the right people. So I think that's part of it. In terms of the processes, I think Glenn mentioned that, we end up with some processes that are not perhaps exactly what we want. They're not going in quite the right way. So, and I think there is a huge amount that can be done in dealing with non-standard processes. But then your systems is the technical side of things. And the way I see it, you can actually use your scalability within your technology to improve those other areas. So, for example, where you've got a very manual process and you're building in extra, I think one of the examples that was used was in individual fees for individual customers. If you have a technology system that is fit for purpose, you can build in those individual areas without having to build a whole separate manual process. So I think from my perspective, that's the key, is we don't look at technology in isolation. It's more how it can work with the people and the processes, and that will give you true scalability.
Okay, thank you very much, Gillian. So, so the answer to that was not 100%. Ian referred to standardization, and a couple of our panelists have also referred to standardization. Do you think we have to sacrifice client service to become truly scalable? Let's start off with Glenn.
So in reality, you don't really want to sort of reduce your level of service to your client. You want to obviously have a high quality service that they can expect. And of course, you expect it to deliver that. I think there is an opportunity, obviously, as you grow as a business, to bring in a complementary standardization. And certainly that should happen within your back to middle office operations. But is that what the client will see? So the client will obviously expect a level of personalized bespokeness. And of course, within a digital world, that framework is easily available. And of course, it follows into almost like a self-service pattern where they can create their own bespoke level of reporting. A classic example is look-through reporting that's widely available now. But of course, if you go backwards into maybe what's more of a manual process, or like your classic PDF generated valuation, which somebody would like a paper copy on, obviously you have to really look to standardize those. You want to remove those inefficient processes as swiftly as possible and use all the opportunities that emerge as well. I think that if we think about the end client, there's a strong desire that they have a personalized service. And I think that, all wealth managers want to be able to offer that as a service, but within a standardized framework. We want people to be able to pick and choose what they can see, but of course we want to be the ones that give them the choice, so that it appears as though they are getting the widest possible choice available.
Okay, thank you, Glenn. And Gillian, do you think we have to compromise our client service to achieve scalability?
I don't think we do, actually. I think we've done it a lot in the last couple of years. Again, I think it was Ian mentioned previously that for years and years there's been a reluctance to automate processes because people have, the argument's always been, oh no, they want their glossy brochures, they want this, they want that, they'll see it as a drop in service. But actually what we found over the whole COVID period was people had to do that. And one of the things that comes out of it, from what I have seen, is you can actually improve the quality, because if you can get people using self-service and you can do it on an automated method, you can start adding in things that let them cut and slice and dice the information that is available to them in the way that they want to see it. And we do it an awful lot here with our standard reporting, not necessarily to our clients, but across the whole of the organization. One of the things I have to do an awful lot in my job is produce reports for senior management. And we've done a really big drive to make sure that rather than me constantly producing endless PowerPoints, which is a complete waste of my time and doesn't necessarily give them the information they want, we've started building in systems whereby, with a little bit of education of the people using them, they can start pulling their own information, which frees up my time to get on with more value added work, and frees up and means that they're getting more of the information I want, and there's no danger of me giving them the wrong thing. So I think if you can extend that then to servicing your clients, it's the same sort of approach. It's if you can get them comfortable with using self-service, then you can actually offer them a better level of service, because they can draw more information than you perhaps would have been able to give them if it was dependent on your own way of doing things. Which also, of course, then would allow you to take on more clients and reduce your relationship manager client ratio.
So Gillian, I totally agree with you that quite often you find or you hear that relationship managers spend a lot of their time reporting or servicing requests like that. It's often said that the age range of the typical client of a wealth management firm is such that they won't use or can't use self-service type tools. What's your opinion on that?
I think that if we'd have had this discussion 20 years ago, I might have been able to agree. But, you know, the older clients of today, the ones who everyone's saying, no, they don't use it, they all use it now. They all had to use it during COVID because the places weren't open. And I actually think a lot of them like it. You know, you now look at anything from social media to people doing their own bank transfers and that. My father's a classic example. He's going to be 80 in just over a year, and he still does all of his stuff he does all of his stuff online. He gets all of his bank statements online. He gets all of his reports online, and he's very happy to do so. I think, yes, there are people out there who don't embrace the technology, but let's face it, with every year that goes past, they're getting fewer and fewer, and that argument becomes weaker.
Thank you very much. And Mark, do you think there's a compromise of client service at in order to achieve scalability?
Not at all. I think I agree with everything that's been said, really, particularly that older people are perfectly happy using digital services. Actually, I find it's more the very busy 40 and 50-year-olds who don't have time to do it that are a bit more of a problem. I actually think that a strong digital service is actually increasingly admired by people. Yeah, as long as that's complemented by access to your advisor. Because, you know, what are our clients buying? They're buying investment performance and reassurance about their status and security and trust. That can be a few phone calls done correctly. The nitty-gritty business of collecting national insurance numbers and so on, I think an awful lot of people now are perfectly used to delivering that on a screen, really.
Okay, thank you very much.
And to my point, actually admire it if what you've got is a good and efficient service that does that.
Yes, okay, excellent, thank you. So we've touched on a couple of things that have traditionally been blockers to scalability. What do people think that are now the blockers to achieving scalability? And let's start with Gillian for that one, please.
Gosh, I think there's a number of things, so I shall just rattle off 2 or 3 off the top of my head. Big one is funding. It's always going to be funding, because if we looked at the figures again that I think it was Tarek was sharing, that if people are spending a high percentage on their IT investment, then obviously in the year in question profitability goes down. There are a lot of our firms are accountable to shareholders and they don't want to see it. But what tends to happen then is if you put off the technology for too long, when you do it and eventually have to do it, then it can be horrific. And I think we found this in the wider financial services industry with the movement to ISO 20022, where we're suddenly going from making very basic SWIFT payments, which have been in the same MT format since the 1980s, to the new MX format. And a lot of the firms that have never embraced any technology there have got a massive job. But I think this is very standard across the industry. People don't want to spend the money because IT isn't cheap. So I'd say funding was a big one. And I think that also that failure to see that by investing, you're actually longer term going to do yourself a big favor comes a lot from a fear of the unknown. People don't, there are a lot of people, particularly in the wealth management industry, particularly in very senior positions, who haven't grown up in a particularly tech savvy world. These are the same ones who are telling us our clients won't want to use it. Actually, when it comes down to it, it's them who don't want to use it because it drives either a fear of being replaced. It takes them out of their comfort zone. If you're in a very senior position, you want to know, darn well what you're doing. And actually, if you're being asked to move into an area which is less comfortable, I think that can really, really drive a lack of appetite. And I would say that for me, those are the 2 key things.
Okay, thank you very much. Mark, what do you think the blockers to scalability are?
First of all, that last point that Gillian made, non-adoption by the front office.
That's internally, yeah.
Yeah, and that really depends on your culture. You know, I work for a partnership. Partnerships won't always fall in line. Other organizations have different cultures and can oblige these things to a greater extent. But it's all very well to have some new techniques. It's something completely different to have people adopt it. The other point I've made is it depends what the consistency, or if you like, the heterogeneity of your business is like. And I've heard people say to me oftentimes, this client's giving us 40 million, of course we'll bend over backwards to give them a specific report. And that tendency will always be there. And that depends on client profiling and your kind of positioning in the market. But those two things are the main blockers. They're much more cultural than delivery for me.
So Mark, at Killick, do you segment your clients into these are the guys who get a standardized service, and these are the very wealthy people who we're prepared to do something a bit different for?
Jason, I think the answer is not yet.
Not yet, but there is a potential aspiration to do so.
Aspiration to go there, yeah.
Okay, thank you very much, Mark. So Glenn, similar question to you.
Just to really support Gillian's comments around sort of a capital investment to ensure any program of works is supported. Scalability obviously does require that investment, not just in the technology, but in the people. You know, you have to bring people with you, which falls exactly into Mark's point there about adoption. You know, it is all about bringing those people with you along on that journey. I'd say also one of the, you know, blockers I've seen in the past, though, is of course your move away from legacy to the new world. And of course, you know, that's a big challenge, but it can also be a challenge in one way, of course, replacing legacy and putting in new and afresh, but also integration. If you've got an existing legacy system that needs to stay in situ and then integrate into other systems, that integration piece is key. I think the industry on the technology side has come a long way. Obviously, standardization with things like APIs, consistency of standards has really helped. Service providers have also adopted much more of a marketplace feel to them so that people can plug and play. I think we're getting there. It's looking better, but still have a long way to go, I suspect, as well.
Okay, thank you very much. So we talked about a lot about the ability to service a greater volume of work with a given headcount, or indeed the same volume of work with a reduced headcount during both Tarek and Ian's presentations. How do we address our staff concerns around job security when we're trying to implement optimization projects or programs? So let's start with Gillian on that one, please.
Sure. Well, I think at the moment it's a lot easier than it was a couple of years ago because the technology world has absolutely exploded. And one of the biggest challenges I think a lot of people are having is getting the right people and bringing them in. So there are two things I would look at on that. The first of which is you don't actually want to lose people from your organization who have knowledge and experience. You know, you don't throw the baby out with the bathwater. So for me, it's more about how do we get the right people in the right place. So if somebody is a bit concerned about the job, there is an awful lot of increasing technology going on at the moment. Retrain these people, you know, say, look, we have huge opportunities within the IT world. Most of the areas we're looking at are actually growth industries. The spend on IT since COVID has gone through the roof in most countries because it's had to. Let's make sure that our people can bring the knowledge and experience they have of the organization and acquire the new skills to help us move to this brave new world. Now, as we say, if we're keeping the same number of people, that's great. If we are looking to reduce, then yes, there's a challenge, but I think there is a natural wastage that tends to happen anyway. And unless you're going to do something absolutely drastic, and I think most of what we've been saying here is that an incremental approach is probably better, and there are lots of things we can do in small increments, then there shouldn't actually be a huge amount of loss there. And depending on, you know, the company, sometimes people will be wanting to be quite close to retirement anyway. Let's make it possible for them, give them a decent payoff, and get rid of the people who want to go rather than those who don't. So I think unless you're planning on doing something absolutely drastic, and that would be far more in line with a much wider strategy piece, then I think for the purpose of scalability, providing you handle your people right and you can give them the opportunities rather than just get rid of them and bring somebody in, then I think you can actually make it work.
Okay, thank you very much. Mark, how do you think we need to address the staffing concerns around scalability?
I mean, very little to add to what Gillian said, really. First of all, perhaps the obvious point that we're doing this to grow the business and have more business, so there should be plenty for everyone to do. If we put in scalability measures and don't grow the business, that's a bit of a wider business problem, actually. But I might just answer a slightly different question, which is for me about staff development in this industry. I've mentioned I come out of BNP Paribas. Operational people in that bigger framework are very familiar with efficiency measures, managing larger teams. They're not just experts. One of the things we need to do with our industry is move away from being expert driven to being management driven around a lot of this stuff. And Gillian was saying there are plenty of people around with those sorts of skills. We need to help them, expertise-based skills, we need to help them to become much wider managers.
Okay, thank you very much, Mark. Glenn.
I think really going back to the original question, obviously it's about staff and the concerns that they have. My natural go-to is openness and transparency, just making sure everybody is on the same page, they understand the strategy, it's on the table, they can ask questions, it's an open book. Then it's really taking things forward and showing people and demonstrating to them how that you're going to take it forward and what this change looks like. So what's it going to look like in a year? What's it going to look like in 2 years? What's the new target operating model? And then they can get a feel for where they would fit into that. I think people are really aware that with technology change, they've seen it so many times over the last decade or two. I think there's a certain level of comfort with uncertainty. I do think that's there, but it still doesn't change the fact that if some people are uncertain about it, we also have to think about that wider adoption, taking people with us, recognizing we also have to invest in people. It's not good enough just to say that you've got to use this new toolkit or this new system or this, the new technology, and we aren't going to show you how to do it. You have to invest in people. You have to give them that opportunity to really raise the game. And, Gillian did touch on it as well. Obviously, as part of that, if you feel that you're going to lose people, as managers, manage, think about tactically, what does that look like? So if it's natural loss over a period of several years, of course, every business loses people naturally anyway. So, manage properly, think about actually if there's resources that are ring-fenced or are likely to be lost as part of a new operating model, bring in temporary resource, rather than another permanent person, for example, so that you're actually managing the team and managing the opportunity that the new operating model will bring in a much more proactive way. So just my thoughts there.
Okay, thank you very much, Glenn. I'd love to ask more questions, but I'm afraid we're out of time. So I'd like to take this opportunity to thank the three panelists, and let's have the next slide, please. So if any of you want to ask any further questions regarding scalability, or indeed any of the other services that Parkwell or Objectway can provide, here are our contact details. And as I said earlier, the slide decks will be available on the Compare website over the next few days, so you can get the details from there as well. Can I have the last slide, please? So just to point out and let you know that a couple of upcoming events that we'll be running. So on the 24th of November, we have our regular Compare Clients View webinar, and we're going to be talking about have clients' expectations evolved, and some of that will address some of the impacts of COVID and some of the points that we've discussed today that we think that COVID has probably moved client expectations on, and indeed their use of technology. And then on the 9th of December, we've got a Parkwell recruitment event, and we're going to be talking about building diversity within the wealth industry. So we very much look forward to seeing you at those two events and indeed future events. And we hope you've enjoyed this evening's webinar. So good night and thank you.